Hello everyone, welcome to the Reysaş update for the second quarter of 2024. There is a lot to discuss, so let's dive right in. First, a quick overview. Today, I will cover the significant growth in rental income, Reysaş's undervaluation, and the strong tailwinds behind the company, as well as the second quarter results. We still have inflation accounting to deal with, so let's touch on that first. Inflation accounting's goal is to make the financials less distorted by Turkey's current high inflation rate, which is around 50%. What it does is adjust the numbers for inflation effects. Of course, there are tons of details, and honestly, I don't know every single one of them either. However, for my portfolio, Reysaş is the only company that uses inflation accounting, whereas TAV Airports doesn't have to, and FS and CCI, even though they use it, they also present numbers without it for us investors. Also, keep in mind that I track the earnings myself and convert them into dollar terms based on each quarter's end rates, so what you see here won't be GAAP figures from my tables, but I will also be showing the released numbers as well. One final thing, the numbers are constantly updated each quarter because of inflation adjustments. This means that the numbers from previous quarters are retroactively adjusted to reflect inflation effect for better comparison. Of course, this is for the released numbers and not my tables. Starting with Reysaş Logistics. Revenue in the second quarter this year was $88 million compared to $26 million in Q2 last year. This is all in unadjusted terms. In inflation adjusted terms, revenue grew from 2.2 billion liras in first half last year to 5.2 billion liras this year. This adjusted growth shows the organic side of the business that is somewhat cleaned of inflation effects. At least that is the goal. EBITDA also saw impressive growth from $12 million in Q2 last year to $39 million in Q2 this year. Over 200% growth in dollar terms. For net profit, inflation-adjusted figures show growth from 574 million liras in first half last year to 1.3 billion in this year. Let's shift gears and look at Reysaş GEO. Here, I focus more on revenue and gross profit rather than net profit, as the net figures for REITs in Turkey get complicated due to the asset revaluations. Reysaş GEO revalues their real estate annually by a third party, and the appreciation of the assets show up in the net profit. I want to focus on the organic cash generating parts of the business, so I prefer looking at revenue and gross profit. Unadjusted revenue grew from $9.5 million in Q2 last year to $26 million this year, and gross profit jumped from $8.9 million to $25.8 million. In inflation adjusted terms, first half revenue went from 633 million liras last year to 1.6 billion liras this year, and gross profit from 582 million liras to 1.5 billion liras. Quick note on the balance sheet, both companies have reduced their net debt, which was expected given the high interest rates. Their balance sheets are solid, and I won't go into details here, but you can always check them on CAP. For those interested in a deeper dive, I cover these companies in much more detail on my Patreon. You will find analysis not just on Reysaş, but also on TAV Airports, CCI, and Anadolu Efes. The link is in the description. I believe Reysaş is still trading much below its intrinsic value, and I personally continue to add to my position. Let's focus on the REIT side now. Reysaş's primary business revolves around warehousing, with their most strategic warehouses located in the Istanbul region, either within the city or in its neighboring areas. Istanbul, being the heart of Turkey's economy, has exceptionally high property values. This often leads landowners to prioritize residential developments given the high returns from residential real estate. However, Reysaş takes a different approach, setting itself apart by focusing on building efficient, large-scale warehouses, which have become highly valuable in this economic landscape. These warehouses cater to major firms like Carrefour, Toyota, and other well-known companies that require advanced logistics solutions. Reysaş's experience in both warehousing and logistics gives them an edge in understanding tenant needs and providing customized facilities that enhance operational efficiency. Their warehouses are not only about size, they are equipped with advanced features such as solar panels for energy generation and rainwater harvesting systems for sustainability, which highlights Reysaş's dedication to modern, eco-friendly solutions. The rise of e-commerce, both in Turkey and globally, has significantly increased the demand for well-positioned, scalable warehouses. This trend has created strong tailwinds for the warehousing sector, with demand pushing up rental prices dramatically. Reysaş is well-positioned to benefit from these shifts, with rental prices increasing not just in local currency, but also in dollar terms, reflecting the global value of their strategically located assets. The combination of their expertise, prime locations, and the rise of e-commerce creates a highly advantageous environment for Reysaş, solidifying its position as a leader in the logistics and warehousing industry. Let me give you an example to support my point. This month, I will also be releasing one of my biggest projects, focusing on the rental growth for Reysaş GEO on my Patreon. I have been working on it for a long time, and while it still needs some final touches, I believe it will be one of the best analyses I have ever shared. Now, for this example, let's look at the warehouse in Istanbul Esenyurt. The total building space of this warehouse is 41.8 thousand square meters. Just 2 years ago, a section of 13,300 square meters was rented for $6.74 per square meter based on the exchange rates at the time, and this year the same section was rented for $14.94 per square meter at today's exchange rates. This significant increase in rental income really supports my point about the growth potential we are seeing in Reysash's properties. Expect to see similar growth across the portfolio, and I am very optimistic about what the future holds. Personally, I am quite happy with my position. So, to summarize, we are seeing strong rental income growth, undervaluation of the stock, and massive industry tailwinds in logistics and warehousing, all of which make Reysaş a compelling investment opportunity. It is about looking beyond the surface level financials and understanding the business fundamentals. Thank you all for watching. If you found this update helpful, please like, subscribe, and share your thoughts in the comment section. And don't forget to check out my Patreon if you are looking for more in-depth coverage. Thank you for listening. See you next time.